Good morning, guys. Today is Friday, the 10th of April 2026, the last day of the week. This is what we had yesterday. Yesterday was Thursday. This was our analysis. Let me remove this first. This was not there. Let me. Yeah, that one was not there yesterday. So, this is what we are looking for yesterday. Excuse me. We were looking for potential buys above this level. Sorry. We were looking for potential buys above this level. You can see here. Our confirmation was a candle closure above this level, which happened. The candle came, shot up, and closed above bullish, and it left what we call as a fair value gap here. You can see a fair value gap is created between three candles. When the wick of the first candle and the third candle, they don't intersect. You can see what has been happening here. Let me give you an example of around where here. I'm looking for an example. Uh, you see, this is another example of a fair value gap here. The first candle and the third candle, they leave a gap between. This is known as a fair value gap. So the market left a fair value gap there. We were waiting. Remember saying I would put a buy limit here. That is, I would be waiting for price to come back and retest this level. But once price breaks out with a fair value gap, uh, there's a higher possibility that it may not get to your level. So what I said is, what I said to myself is, once price comes back here and I see a rejection on the fair value gap, I would wait for I would look for my confirmation in the 15 minutes. Yeah, we're on the 15 minutes. I'll look for my confirmation there, and this was my confirmation. Price came. You see this red candle, it was rejected. There you can see the rejection, closed above the fair value gap. Next candle came, tried to push down, rejected, closed above the previous candle, and that was my confirmation. So I put my buy limit here. What I just removed here, this one here. Where is it? There. This is where I placed my buy limit here. It was activated. I pushed the market up. It was this was towards the new this was towards the New York session. No, this was the New York session actually, when price came back here to retest. Price came back during the New York session. Came back, pushed up, pushed the market up, pushed the market up. Once I saw this break, moved my stop loss to below this week here, break even. Once this break happened, this was at around 6:30 p.m. Once I saw this consolidation, I decided the market might decide to come back all the way here, and there's no need giving away all this profit. So I decided, let me put my stop loss here. If at all it comes back here and I get another entry, I could take the market up. So this is where I was stopped out in profit. For the sales, nothing happened on the sell side. We didn't get any wick, any candle closing below. So by and large, that was yesterday's trade. Hope you made something out of it. So real quick, let's do our analysis for today. Remove everything, start afresh. 1 month. We do this. I do a top-down analysis because we are different traders here. We have day traders, we have scalpers, we have intraday traders, we have swing traders. That's why I start my analysis from the 1 month. to accommodate all of you. So here we have our support here, our resistance, I mean, we have our resistance there. This is where I would expect the market to experience rejection, or have this is where I would experience I would expect some rejection here if the market decided to move up. Our support here is this is where I would expect rejection if the market decided to move downwards. On the 1 week, I'll try and be fast today. On the 1 week, we have our support here, our resistance. Our support is still down here. This is our resistance. On the daily, remember, I prefer to use the body closure, not the wicks. This is because price could come back all the way here and decide it's not going to go to the wicks and just reverse. You see, if you set your take profit here, price would come back here and then reverse without tapping a take profit. If you're not in the market at the moment, it would go back and maybe even close your trading losses. Why? Because you just missed it because of the body here. So I prefer using the body when I go down to the one to the daily. So on the daily is what we have here. This structure has not been broken here. There's no break of structure here, so we're still going to use this one here, and this one here. On the 4 hours, let's go. On the 4 hours, this is what we have. Our support is there, our resistance there. You see, our support, our resistance there. On the 1 hour, on the 1 hour. So here we can do some refinement. No, wait. On the 4 hours, something we missed here. On the 4 hours, our support is here. Yeah. Yes, that is our 4 hour support. Remember, here there was a break of structure, then price came back here. So that's our 4 hour support here. Use the body closure, not the wicks. On our 1 hour, on our 1 hour is what we have. Where's the 1 hour? So this one here, I would move it to the body there. That's okay there. So for the 1 hour, we have our resistance up there and our support is here. Our support is here because there was a break of structure here all the way up here. Price started moving down. There's a bit of consolidation here. So this is our 1 hour. Remember, we are following price action based on market structure. It's a technical analysis of price action based on the market structure. So we come down to the 30 minutes. In the 30 minutes, we have we had some resistance up here. 30 minutes, we had some resistance up here. You can see price came down, broke the structure here, So we had some resistance up here. Here. Let me do this. 30 minutes, our resistance is up there. So this is what I would do. For the buys, this is where I would be looking for buys, potential buys here. Potential buys above here. For the sales, move this. Move this here. Then use this wick here. Yeah, this is what I will be looking at today. So potential sales, below, potential sales below, potential buys above. Potential sales below, potential buys above. Okay, so for our targets, this would be my take profit one. Huh. Is a take profit two somewhere here? Three. That's the farthest I would want to take the sales. For the buys, we have here. So for the sales, if I get a candle closing below here, I'll remember today is Friday. I don't want to push it just, yeah. Stop loss just above there. For the buys, I don't want to take the market from here. Lock it and take this one here. Stop loss just below that resistance there. This is what we're looking at today. Remember, risk manage your trades well. Trade what you see, not what you think. And happy hunting, guys. Always remember before taking your trades, before you take your trades, look at this here. Before taking your trades, always look at the news. Today we expect some volatility because of the CPI. The CPI data is coming out today at 3:30 p.m. So at 3:30 p.m., if you're in a trade, risk management is key. Either get out or trail your stop loss into profit, or just close your open positions completely. This is what you're expecting today on the USD. This data will affect the USD today, and it may bring some volatility in the market. So by 3:30, if you're still in the market, trail your stop loss to profit, or just close your open positions. So this is what we'll be looking at today. This is TP1 for the cells. That is TP1. That is TP2. And if we get enough volumes today to push the market down, we would get to our TP3. We'll get to our TP3 if we get enough volumes to push the market down. For the buys, is our TP1. I'm seeing another level here. That would be our TP2. That would be our TP2. Our TP3. And if we get enough volumes to push the market up, we'll get to our TP4, hopefully. Yeah, so basically that's what we'll be looking at today. But remember, it's Friday, there's CPI news coming out, so risk manage your trades well. Don't over risk, don't over trade. So see you guys on Monday for a recap of this. Bye.